morning and welcome to another edition of 5 with Fitz. Futures were down and the markets are down in early going. No surprise here, the newsmongers are trying their very best to create sensationalist headlines. Let them. The S&P 500 is up 19.3%, the Dow is up 13.7%, and the NASDAQ is up 17.6% all year to date. My point is, there's still plenty of opportunity on offer. Here's my playbook. Number one, the next stock to crush the markets. Several of my recommendations are crushing the broader markets, a trend I expect to continue for the next decade, perhaps more. Examples include Apple and Microsoft, just to name two. Now, here comes Palantir. It's apparently the third most mentioned stock on Wall Street bets behind GameStop and Alibaba this morning, according to stonks.com. Kathy Wood continues to buy, and what the heck, so do I. Point number two, the FDA is spineless. The FDA, no surprise, has apparently decided not to take a stance on backing Pfizer's vaccines, saying U.S. regulators have not verified all available data. Unfriggin' believable. Both Pfizer and Moderna have released data showing that breakthrough cases are less frequent and less severe in people who are more recently vaccinated and boosted. ICU data, meaning intensive care unit data from around the world, supports this too. Typical government. Your personal views on the vaccine are moot, and so are mine. What you want to focus on as an investor is that the folks who run the Fed, who run the IRS, and who run the Postal Service are the very same folks who came into World War II prepared to fight World War I. Private industry is always ahead of the game, and in a situation like this one, I submit that's a good thing. Use the drop to accumulate more Pfizer. Income is great, and the upside potential is even greater. Point number three, are you done with Chinese stocks yet? You should be. I heard it repeatedly in Las Vegas, where I was at the Money Show for the past week. Aren't there any Chinese stocks worth owning right now? The logic from concerned attendees usually went something like this. China's booming, it's got amazing entrepreneurial volume, and it's the world's second most populated nation. Besides, and here came the mic drop, Wall Street says they're cheap. Yep, they say that all right, and they also say that Ann and Nicole Smith married for love, redheads are part alien, and that the CERN particle accelerator is an interstellar communications device. Wall Street wants you to buy so that, odds are, they can sell out. I sold all my Chinese stocks months ago and urged one bar ahead readers to do the very same thing. And I also said so on national television, most recently during a morning appearance with Stuart Varney. Now, I'm hearing from various sources that Beijing may require delisting in the United States if Chinese regulators have their way. So if you're tempted to buy Chinese stocks because they're beaten down, I get that. Just remember this. Beijing does not care about how much of your wealth they destroy if it means China's protected. The situation doesn't have to be one red yuan with anything remotely resembling being undervalued. There's over $1 trillion at risk in more popular Chinese stocks. DD Global is but one, Alibaba is another, JD.com is a third. Point number four, buy this on sale if you've got $1,000. Big data is big money, and this company services the very top players, including Amazon, Alphabet, and Microsoft. The company is guiding towards positive cash flow for the first time in 2022. Splunk, SPLK. I like a few shares now, but I like them even more at $115 a share if the market hands me that opportunity. It could go lower, it could go long for Palantir's ride. Selling puts sounds like a pretty good idea to me. Point number five, retail sales climb unexpectedly in August, according to economists. I don't know how these guys have jobs. There's nothing unexpected about this. The world is reopening and parents need to spend money as their children go back to school. It's how the cycle worked since the dawn of time. What catches my attention, though, is the non-store spending and food and beverage sales. They jumped 5.3% and 1.8% respectively. This data point tells me that COVID-19 Delta variant fears are more real than you think. Today's bottom line, diversification is the financial version of spray and pray. Concentrate single-mindedly on the winners or you will miss them. The right tactics, selling cash secured puts, covered calls, and more can help considerably. You got this, I promise. And now, as always, let's get out there and make it a great day. I'm Keith Fitz-Gerald, and I'll see you next time. Thank you for watching today's Morning 5 with Fitz. Click subscribe to get daily market notes right here on YouTube, or sign up for the email versions at the link below. You can also find me on Twitter and Instagram for my real-time thoughts on markets, analysis, and more.